Welcome to Trade with Zeps, a channel dedicated to empowering traders through knowledge, discipline, and strategy. So let's kick things off with today's topic. What is Forex trading? What is Forex trading? Forex trading, short for foreign exchange trading, is the global marketplace for exchanging one currency for another. It is the largest and most liquid financial market in the world, with a daily trading volume exceeding $7 trillion. Unlike stock markets that operate in specific countries, the Forex market is decentralized and operates 24 hours a day, 5 days a week, across major financial centers such as London, New York, Tokyo, and Sydney. Understanding the Forex market. In Forex trading, currencies are quoted in pairs, such as EUR, USD, Euro, US dollar, or GBP, JPY, British pound, Japanese yen. Each pair shows how much of the quote currency, the second one, is needed to buy 1 unit of the base currency, the first one. For example, if EUR, USD equals 1.1000, it means 1 euro equals 1.10 US dollars. If the rate increases to 1.1200, the euro has appreciated against the dollar. How Forex trading works. Forex trading involves predicting how currency values will change over time. Traders can buy, go long, when they expect the base currency to rise in value. Sell, go short, when they expect it to fall. The market operates through a network of banks, brokers, and electronic trading platforms, making it accessible to both institutional investors and individual traders. Example of a Forex trade. Suppose a trader believes the euro will strengthen against the dollar. They buy EUR, USD at 1.1000. Later, the rate rises to 1.1200. The trader closes the position, earning a profit of 200 pips, the smallest unit of price movement. If the market had moved in the opposite direction, the trader would have incurred a loss instead. The role of leverage. Forex trading often involves leverage, which allows traders to control larger positions with a smaller amount of money. For instance, with 1:100 leverage, a trader can control a $100,000 position with only $1,000 in margin. While leverage amplifies potential profits, it also increases risk. Losses can exceed the initial investment if not managed carefully. Who participates in the Forex market? Central banks influence currency values through monetary policy. Commercial banks and financial institutions conduct large-scale trading for clients and investment purposes. Corporations hedge currency risk from international operations. Retail traders, individuals who trade for profit using online platforms. Risks and challenges. Although Forex trading offers vast opportunities, it also carries significant risks. High volatility. Rapid price changes can lead to unexpected losses. Leverage risk. While it magnifies gains, it can also magnify losses. Emotional trading. Fear and greed can lead to poor decisions without a disciplined strategy. Benefits of Forex trading. 24-hour accessibility, Monday to Friday. High liquidity. Easy to enter and exit trades. Low transaction costs. Potential to profit in both rising and falling markets. How to start Forex trading as a beginner. 1. Learn the basics. Understand how currency pairs, pips, and leverage work. 2. Choose a reliable broker. Look for a licensed and regulated broker. 3. Use a demo account. Practice trading with virtual funds first. 4. Develop a strategy. Define your goals, entry, exit rules, and risk limits. 5. Manage your risk. Use stop-loss orders and never risk more than you can afford. Key Forex terms to know. Pip. The smallest price movement in a currency pair. Spread. The difference between the buying, ask, and selling, bid, price. Lot. The standard unit of trade size in Forex, usually 100,000 units. Margin. The minimum deposit required to open a leverage position. Final thoughts. Forex trading is an exciting and dynamic financial market that offers opportunities for profit, education, and global participation. However, success in Forex requires knowledge, discipline, and risk management. Beginners are advised to start with a demo account, learn trading strategies, and never invest money they cannot afford to lose. However, success in Forex comes from education, patience, and disciplined risk management, not from quick wins. Start small, stay consistent, and focus on building your trading skills over time. Thank you for watching. Kindly like and follow for more Forex trading educational content.